Investing is a crucial component of building wealth and achieving financial goals. Whether you're saving for retirement, a down payment on a house, or your child's education, investing wisely can help you grow your money over time. In this video, we will explore 10 essential points to consider when entering the world of investing, providing you with the knowledge and tools necessary to make informed decisions. The video is going to be interesting, so make sure to subscribe to the channel and hit the bell icon for more future updates. Let's get into the video. Number 10. Set your financial goals. Before you start making investments, it is essential to identify your financial objectives in a clear and concise manner. Determine what it is that you want to do with your savings, whether it be a comfortable retirement, the support of a business venture, or the purchase of a property of your dreams. You will be able to customize your investment strategy to align with your aims if you first define clear goals for yourself. For instance, long-term objectives may need investments with a higher level of risk, whilst short-term objectives may call for techniques that are more risk-averse. Number 9. Create a budget. The ninth step is to make a budget. Before you start investing, you should evaluate your existing financial condition by making a precise budget. Determine how much money you can put towards investing on a monthly basis by doing the following steps: calculating your income, keeping track of your expenses, and doing the math. A budget not only gives you an all-encompassing picture of the state of your finances, but also assists you in laying a strong foundation for your investment strategy. Number 8. Establish an emergency fund. Create a fund for unexpected expenses. Creating a fund for unexpected expenses is a key step that must be taken before beginning to invest. Put money away that is sufficient to meet your living expenditures for 3 to 6 months. Your investments are shielded from having to be cashed out too soon by the safety net in the event that something unforeseen takes place, such as a loss of employment or a medical emergency. Number 7. Educate yourself. Investing needs knowledge and comprehension of various investment possibilities and techniques. Therefore, you should educate yourself on these topics before you start. Invest some time and effort into educating yourself on the various investment vehicles available to you, such as stocks, bonds, mutual funds, commodities, and real estate. Gain an understanding of the dangers that are connected with them, as well as the possible rewards and past performance. To increase your investment expertise, you should follow respected financial websites, read books, and participate in educational seminars. Number 6. Determine your risk tolerance. Determine a level of risk you are willing to take by taking into account elements such as your age, the financial goals you wish to achieve, and your own personal preferences. Younger investors that have a longer time horizon can often afford to take more risks, and they may be more comfortable with aggressive investment strategies because of this. On the other side, older investors could favor a more cautious strategy to protect the wealth they have amassed over the course of their careers. Number 5. Diversify your portfolio. One of the most important things you can do to reduce the amount of risk in your investing portfolio is to diversify it. Your investments should be spread out among a variety of asset classes, industries, and geographical regions. When you diversify your holdings, you lessen the influence that the success of any individual investment has on your whole portfolio. To build a portfolio that is both diverse and well-balanced, you should give some thought to putting some of your money into several sorts of investments, such as stocks, bonds, and real estate. Number 4. Choose a brokerage account. You should open a brokerage account with a reputable financial institution or an online broker as soon as possible. Do some research into the many platforms available so that you may pick one that satisfies your requirements in terms of having reasonable fees, providing a diverse selection of investment opportunities, and supplying educational materials. Look for a system that has a user interface that is intuitive and provides excellent support for customers. Number 3. Start with low-cost index funds or ETFs. Investing in exchange-traded funds, ETFs, or low-cost index funds as your first purchase is a good way to get started in the world of finance. These products provide extensive market exposure by replicating the performance of a selected index or asset class. When compared to actively managed funds, index funds, and exchange-traded funds, ETFs, typically have lower costs, which makes them more cost-effective solutions for long-term investing. Number 2. Consider long-term investing. Because investing is often a long-term endeavor, it is crucial to avoid making rash choices in response to short-term shifts in the market. Despite occasional dips, market performance has a track record of showing an overall rising trend over the course of time. Maintain your concentration on your long-term goals, exercise patience in the face of market volatility, and steer clear of rash decisions that could have a detrimental effect on your investment portfolio. Number 1. Monitor and review your portfolio. Regularly monitor and review your portfolio. It is essential to regularly monitor and analyze your investment portfolio in order to ensure that it remains aligned with your objectives and the level of risk you are willing to accept. Maintain an accurate record of how your assets are performing and determine whether or not any changes are required. You should perform frequent rebalancing of your portfolio in order to keep your preferred asset allocation. For instance, if one asset class has performed particularly well and now makes up a larger portion of your portfolio, you may need to sell some of that asset class and reinvest the proceeds in other asset classes that are currently underrepresented in your portfolio. Monitoring your portfolio also involves staying informed about market trends and economic indicators that may impact your investments. Stay updated on news related to the industries and companies you have invested in. This information can help you make informed decisions and proactively manage your investments. It's important to note that investing is not a set-it-and-forget-it endeavor. Regularly review your investment strategy and assess whether it needs adjustments based on changes in your financial goals, risk tolerance, or market conditions. Consult with a financial advisor if needed to ensure your investment decisions align with your long-term objectives. Investing can be a powerful tool for building wealth and achieving financial goals. By following these 10 essential points, you can lay a strong foundation for your investment journey. Set clear financial goals, establish a budget, build an emergency fund, and educate yourself about various investment options and strategies. Determine your risk tolerance and diversify your portfolio to minimize risk. Choose a reputable brokerage account and start with low-cost index funds or ETFs. Embrace a long-term perspective and avoid making impulsive decisions based on short-term market fluctuations. Finally, regularly monitor and review your portfolio to ensure it remains aligned with your goals. Remember, investing involves risks, and it's important to conduct thorough research, seek professional advice when necessary, and stay informed about market trends. With patience, discipline, and a long-term mindset, investing can help you grow your wealth, secure your financial future, and achieve your dreams. That's all for today's video on how to invest. We hope you enjoyed it and got a chance to explore some essential points to consider while investing. Which one of these points did you find the most impressive? Let us know in the comments below. Don't forget to hit the like button, share this video with your friends, and subscribe to our channel for more exciting content. Thank you for watching, and we'll see you at the next one.